Over the last 8 months, I have invested £8,000 into my tax-free trading 2 and 2 portfolio. And in today's video, I'm going to take you through exactly how I have invested roughly £1,000 a month down to the last penny, so that you can have a better idea about what is in profit, what is in loss, and what I think are some of the best options to invest your money to grow your wealth and passive income. So, what we're going to do is take you behind the scenes, and I'll show you the thinking behind my portfolio, why I bought each stock, what purpose it serves to build me long-term compounded growth, and by the end of the video you'll be able to use the information and my own personal portfolio to better inform your own investing journey to build your way to a better financial standing and maybe even financially retire. So, let's get started. Welcome to the channel, and please be sure to like this video so that the YouTube algorithm will give you more videos like this one, and to subscribe if you haven't already. Now, with this portfolio, I have a number of different outcomes that I want to achieve with it, and I have about 20 stocks that all have a particular purpose to try and get me there. And essentially it all comes down to two things, which is to build my wealth by share price growth and to increase my passive income from dividend payments. Now, what I'll show you in this video is my own personal journey and thoughts. It is not financial advice, so be sure to do your own research and take your own goals and risk appetite into account, because stock prices can go up and down. So, let's dive right in. Now, 8 months ago, I moved a portion of my investments into a tax-free stocks and shares ISA on Trading 2 on 2. And like I said, I've invested an average of £1,000 per month during that time. My eventual goal is to reach financial independence, and I can do that through a combination of share price growth where I can sustainably draw from my portfolio over time without reducing the capital amount, and by acquiring dividend stocks to increase my passive income. So, with that end goal in mind, the first stock I bought was the S&P 500. This is the largest holding I have at £1,309, and for a good reason. If I get asked what is a good beginner stock to start with, I'll usually suggest this ETF. And that is for a couple of reasons, but essentially it is known to be one of the best options for long-term wealth creation that also has good diversification. It only pays a dividend of around 1.3%, but there is also the 4% rule, which says that you can sustainably withdraw 4% a year to cover your expenses when you want to retire without reducing your investment amount over time. I've done a whole video on this if you want to check it out. So this is the anchor, you could say, of my portfolio. Now, since Trump became president, many of these USA shares have been up and down each time tariffs or trade wars flare up or calm down. So right now 15 are in profit and 5 in loss, as we're about to see. But all of that is okay, because each of these shares I'm investing in for their compounded value over the long term, so the short-term fluctuations don't matter to me all that much. Then, the next category I invested in over the last 8 months was the hybrid shares. Now, I call them this because their purpose is to have both share price increases over the long term and some high value steady dividends. And there are specifically 5 shares that I think fall into that category. So let me take you through them. The first are the property shares. I've been investing in EPR Properties, Simon Property Group, and Realty Income, and I've invested around £1,200 for each of them. So, before Trump's trade wars, these were all in profit, but even now we've got 2 down and 1 up, and we're sitting in an overall profit. And they've all been growing recently, so I'm hoping that growth will continue over the years. But importantly on these is the dividend income. Realty Income is paying 5.7% per year in dividends, which is about £72, with Simon Property paying 5.2% and £65 a year, then EPR Properties paying a very nice 6.2% and £80 a year. And the nice thing about Realty Income and EPR is that they pay their dividends every single month. Then, I have my banking shares, which have done really well over the 8 months. So the final 2 of my hybrid shares are HSBC and Lloyds Bank, with about £416 and £575 respectively. Now, these shares have done great, with 22% growth for HSBC and a very nice 39% growth in Lloyds for 8 months. But not just that, HSBC pays 5.5% dividends for £28 a year, and Lloyds is paying 4.1% dividends at £25 a year. So these two really are the best of both worlds. Now, these two investments turned out to be really profitable, but I don't always post my portfolio updates on YouTube that regularly for you to be able to see what I'm investing in real time and on the day. But that is what we do in the Casual Cash Club, which is our community on Patreon. The club is where I post all of the behind the scenes moves in my portfolio, including all of the buys and sells in real time and on the day. But not just that, I will go into why I am investing in that particular stock and what is happening in the news and the market at the time. I also post my portfolio updates every month so you can see exactly which stocks are doing well and which are not, so you have more information to be able to make decisions for your own portfolio. Then each month we also post my passive income and dividend payments for the month, along with what dividends each of my stocks is currently paying as I try and move closer to financial retirement. Right now, I am training to run a marathon, and I've been using an app called Strava. It shows me every time my friends go on a run and what their stats and data are. And when I'm on the couch and I see them out and running, it motivates me to go out there and do my own training. So if you're looking for some extra information or just some motivation to see others investing and remind yourself to do the same, then go check out the club in the link in the description, and I'll be offering 90% off for new joiners. So it's just 50 US cents, and I think it offers a lot of value, so I'll see you there. Next up is a share I added to this portfolio that is purely for passive income, and it's called the Global X Nasdaq 100 Covered Call ETF. But most people call it by its ticker symbol QYLD. And the reason this is for passive income is because it pays a whopping 12.5% a year in dividends, and it pays out dividends every month. So that's about 1% each month, which is really good. You can't expect long-term share price growth for this one, just some good income, as the stock pays out £147 a year on the £1,240 investment. Then I have a couple other ETFs to add some diversification around the world, and lastly I'll show you my custom-made ETF using a pie of large cap tech stocks. So the first ETF around the world is the iShares China Large Cap. There are a lot of reasons I'm investing in this ETF, and I have this video going through them all. But basically, I think China has some fantastic companies at the moment that will do well, especially in the tech and AI revolution. Plus, the China market has been at a good value lately and has outperformed the S&P 500 this year. So I have about £300 here, and I still want to add more to this one over time. Oh, and it pays 2.4% in dividends. Then, if you watched my last video, which I hope you did because it's one of my favorites, I have been investing £1 a day every single day into the Vanguard FTSE All World ETF, and if my maths is right, that should grow to £1 million by the time I retire. So it's early days, and I've got £10 in here so far at a small 1% profit, and obviously this will keep growing every day. Now, the last section that I've been investing, my £1,000 a month, has also been the most exciting to watch. I put together this pie, which is essentially an ETF I created that has selected some of the top shares in the S&P 500 that I wanted a more concentrated position in. But also I wanted enough stocks that I was diversified so no one company would affect it too much. So these are the 11 companies I chose for this pie. AMD, Alphabet, Amazon, Apple, Berkshire Hathaway, Broadcom, JP Morgan Chase, Meta, Microsoft, Nvidia, and Tesla. So in reality, it's 9 tech stocks and 2 financial stocks. I wanted this to make sure that as AI and technology shapes the future, I've got a good stake in all the most important companies that will make it happen. Then in addition, I have Berkshire Hathaway and JP Morgan that I think are great companies with proven long-term growth. So as you can see, 9 of these are up and 2 are down, but that's why we diversify, so that the overall total of this pie is an investment of £634 that is up in total by 8.19%. Now, tech stocks don't pay much dividends, so here is the breakdown of what these pay, but it's more about capital growth with these 11 companies. And guys, that is it. That is my total tax-free trading 2 and 2 portfolio, and it is also how I have been investing an average of around £1,000 a month over the last 8 months. And even with the trade wars going on, it has returned a very nice 5.1% profit, or £319 so far. And I'm sure there will be more compound returns to come over the long term. Now, I also have another £6,263 invested in a couple other portfolios in cryptocurrency, but more on that in later videos. So feel free to subscribe if you haven't already to see those investments and how this portfolio progresses. I hope this video helped to give you some ideas or to see my journey and thoughts around my portfolio. And if you want to see my investing behind the scenes, live and in real time, and get some ongoing motivation to invest, then check out the Casual Cash Club in the link in the description. But until then, I'll see you guys next time, as always, on Casual Cash. Cheers.